So Bitcoin rising back above 110,000 this week, and the Nasdaq posted a record close. So is this a sign that the risk-on trade is back in full force? Well, let's ask one of the biggest bulls on the street, Fundstrat's Tom Lee. Tom, happy Friday. So we're up more than 15% year to date for the S&P, probably more than you expected in late spring. At the same time, we had this government shutdown, tariff headaches. So why should investors be more bullish on risk assets, the market overall, than they were 6 months ago?
Well, John, even at the April lows, just to be clear, our S&P year-end target was 6,600. So we were still expecting explosive recovery in markets. But we are above that level. And, we're 10 weeks before the end of the year and the S&P's at 6,800. I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%, maybe even 10% into year end.
Wow. Okay, so where does crypto fit in, especially when you're looking at how those currencies are moving versus what's happening with tariff concerns, global trade concerns, et cetera?
Crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
Yeah, I was actually going to get your thoughts on that, Tom. But in light of that, and you and I have had these conversations over the months, over the years. I can think about the conversation we had in early August where you talked about, on the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500 and arguably what we're seeing in Ethereum and what that says about the Russell 2000, I want to get your thoughts.
I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. The number is probably multiples of what happened during FTX, and Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store of value, because if we had seen this happen with gold in the gold market, if there was a huge deleveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. I mean, on the L1 and the L2, because of stable coins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.